Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And we are just one day away from the end of the week. Remember, this is a holiday week, so we'll be closed on Friday. It'll be Good Friday, and let me think what else will be brewing there. It'll be, and I believe we're closed on Monday. I will be doing the Friday morning broadcast, I believe, but not Monday. I think that's how it's going to work. So, anyhow, as I said, good morning, good afternoon, and good evening. Doc here from North America watching I don't even know what to call it anymore. It's just like living in a fantasy world of finance. But anyway, the ADP numbers came out looking very good. Can't complain about that. Looks like over half a million easily still. It was under what they were anticipating. They were looking for like 550,000 or something like that. I think it came into the teens, like 517,000, and that makes sense. They are flooding the economies with cash. Do re mi. That's what it really comes down to is do re mi. Plug in that money, and it's got to go somewhere. And remember, there are money managers out there who need to make some money. They got to do something. They gotta make money. That's what their job is. They want to work. They got to make some money, or at least look like they're trying to make money. One and the above. And so that is where we're at. Now you can see the dollar. I was talking with Wilco this morning for those oldies here that basically have remember Wilco doing webinars. He's a very active crypto trader. We refer to him usually when we're trying to figure what's going on in the crypto world. And we were talking about that this morning, and just some general stuff of the cryptos. And I was saying to them that I can see that the silver and gold traders, short-term traders, have drifted over to the cryptos. There's no doubt about it. It is the place they should be, because without a doubt, the central banks have full 100% control over anything and everything, and right now they're leaving the cryptos alone. And we'll see when that changes. But right now, they're leaving them alone. And so, we'll know when the central banks decide to try to steal their lunch, basically. That's what it comes down to in the end. It's tough enough as it is. Like the Bitcoin, you have to pay capital gains every time you try to transact it. And you have a gain in it. So it makes it a little tough to treat it like a currency. But that's what it is. And remember, it's a different asset class. That's what it really comes down to. It truly is a different asset class, and that's what we were hoping for. We were hoping to see something change after quantitative easing got going. We're in the era of QE, so that means that fundamentals don't function, and that means uh, you know the central banks have full control and try to keep a stability. Can you imagine flashback this time last year? The Dow Jones Industrial Average was swinging 1,000 points a day for weeks, for like 3 weeks. It was crazy. 1,500 point day downs and 1,000 point day downs and 1,000 point day ups. And that was because there were volatility traders that got trapped into selling naked premium, and the only way they can hedge is to blindly sell stock. They had to sell it. It had no relationship on what price they sold it at. They just had to sell it short, and they were hoping to survive. And 4 of the 5, I understand, are gone. They lost billions, and they are gone. And we've seen that for the last year. And we started talking about that V bottom, and people said that sounded crazy. And the next thing you know, we're 10,000 points up on the Dow Jones Industrial Average. Well, how do you do that? Let's put it this way: in the pre-QE era, never happened. Never happened. Dow Jones drops 10,000 points. It is not going to bounce up 10,000 points in a matter of weeks. It's just not going to happen. But in a quantitative easing era, sure. Because the key word is stability. Their job is to keep stability. And the objective is to just bring it back up again. Lend out enough money that would lift it up. Buy enough assets that make it go up more than go down. As they always say on the old trading floors, why is it going up? Because there's more buyers than sellers. And that's pretty much what it all comes down to in the end. So we fast forward to the QE era now, and we have cryptos, and they're the replacement for the the metals, because the metals are being used as a surrogate for the dollar. Anything that trades in large quantities in dollar-denominated increment is going to be used as a currency itself, and then they can go hedge the asset itself with derivatives, with option derivatives. So we call them synthetic positions. And so it's what you're doing is you're actually just hedging the product itself, and you're at risk of the currency translation. And so if you want to keep stability, they obviously have channels set up, and that's what these lines here you see right here on the Chicago quant chart, when we were looking at the Swiss, we had identified that range, and we were talking about it for months upon months, all the way back to was that August of 2020, right? We were talking about that, how it just kept on trading the range because they were keeping. Remember, the U.S. Treasury defines what they refer to as not stimulus. What is it? They have a name for it. Something like interference. Interfering in currencies, or they have a name for it, and I can't remember the word exactly, but it's basically saying, hey, guess what? They're interfering in the currency market. Don't ask me how it's defined, because with QE, everything is interfered with. But they, what do they have it? I can't think of the word, but it's like, falsifying. So the Treasury comes out every 6 months and says, okay, these guys are doing something to their currency, and it's wrong. Stop doing it. And so we watch these channels. We know that it's an envelope or a channel that the markets are following through on. So we kept on thinking that sooner or later we're going to break down on the 90 area on the Swiss, and it did. And we figured that we expected to see some weakness in the dollar. A lot of people started to interpret that as a crash in the dollar. And as I said to Wilco, that's how the conversation started about Wilco this morning, is there is no crash in the dollar. And the dollar is not going to be replaced. There's nothing to replace it with. Because if there was, we would see it. I mean, it would be out there. Just like you see Bitcoin every day, and you see the cryptos and Ethereum, you see that every day trading. You see the dollar trading, and then you see your average pairs trades trading. And then when you hear, the crazy stories about, say, the Chinese yuan going to be, the next world reserve currency, it's just, if it was, it would be trading right now live on a chart. We would be watching it like hawks, and we see the volume, and there would be like 10 or 15% of the world volume would be Chinese yuan, and it would be obvious. I mean, in other words, it'd be physically obvious. And instead, there's barely 2% of the yuan trades, and it's a fixed number, and we don't see anything. And then we've seen the Chinese come out and tell us that they're going to have a translatable currency for the world to trade. It's going to be backed by gold and oil. When they announced that, I told everybody here, that's just ridiculous. It's not going to happen. They're not going to do it. But, it was an exciting thing. And so that's where we are. The dollar is strong because there is no replacement for it. That's the problem. And that is a problem. Trust me. There are traders here in America for decades who have upset about the fact that the dollar is the dominant currency. We don't want it to be the dominant currency. It messes with our fundamental numbers. It makes it harder to predict directions because the thing is so overwhelmingly purchased. Matter of fact, most people don't know it. There is a futures contract which is the most actively traded futures contract in the world. Right? Isn't that funny? Everybody thinks the yuan is going to be the next reserve currency, in the media, and that is. And there is a futures contract that trades the largest volume in the world, and like 9.9 out of 10 traders don't even know what it is. And the reason it's called the euro dollar. And it's not the euro unit. It's not this euro against the dollar. They've been trading it for decades. What it is, it's money trapped outside the United States and the interest rate differential. And there's so much of it that the future contract at the CME, the Eurodollar, when they finally created, that's why they refer to this as the Euro unit and not the Eurodollar, because there's already a futures contract called the Eurodollar. And what it was American money trapped in Europe, and it was traded against Deutschmarks and French francs, and in other words, it traded against all the different products. Hey, T set two or T what's it? T set so. Hey, how you doing? Intervention. Yeah, that's it. Intervention. That's the word. Yeah, I mean, I don't know how they can define intervention. How do you define intervention in a quantitative easing world now? I mean, it seems kind of crazy, but the only way we can figure is it's a channel. It's this channel. In this particular place, we assumed that that's what it is, and it's, you can tell it slides because the Treasury comes out, the U.S. Treasurer comes out and he says, spreadsheet, 5 weeks, 4 weeks, something like that. It's right here on line 25, right there, 5 weeks in a weekly buy, and you can see also at the same time, where is it at? The Swiss on line 21 is 11 weeks in a weekly buy. So obviously the dollar has been very firm for a while here now. These products have to march with the whatever way the central banks say they have to march, and they don't have much of a choice about it. And luckily, stability is the name of the game, so that's a good thing. I mean, you buy assets and they go up in value. Who can complain about that one? That's a good thing, not a bad thing. Hence, you see stock prices across the planet trading at enormous prices. I mean, I can't even believe. Like I saw yesterday, there was somebody's earnings was out. I think it was a couple days ago or something, or some sales were out. It was Target. It's a store here in the United States that from an old department store company out of St. Louis. They created a competitor to Kmart and Walmart. It's called Target. And after a while, they got rid of the old original name, and they just renamed it they changed the company's name to Target because Target was their biggest sales. And now the stock's trading at $200 a share, and I just shake my head. It's like, how can a department store really be $200 a share? But that's it. The fundamentals mean nothing, and because the fundamentals mean nothing, here we are trapped in a forex world where we have to find other ways to be proactive, to be able to decide how to trade. And that's the challenge always. Remember, we're not reactive traders anymore. We're not just sitting on a trading desk or standing on a trading floor watching orders come at us and we have to react to them. Instead, we are all sitting in our offices and our basements and our attics and our lean-tos or wherever we are, and we're at garages and whatever, and we're trading. And we have to be proactive. So you have to look at, different trading tools. That's what we do here. You can see it on the J4X here. There's the Swiss. And when the white line pierces the dotted line, we believe the product is going to go up in value, and most of the times it does, and vice versa. When the white line pierces the dotted line on the downside, it's going to find a way to go down in value, and it usually does. And we've thrown the MACD in there because it's a nice lagging indicator to this relativic indicator. That's what I like to call this one up top here. It's public indicators put together in a relativic way to be able to differentiate between actions, slow and fast. Not looking at the height of it or the depth of it at the lows. We're looking instead about the way it participates against each other. Alrighties, let's roll along. Let's go back to the euro. You can see there the euro has been in a weekly sell since this point here. And the pressure is on, and doesn't seem to want to go away, and right there, and we've been in a daily sell since here. So the euro unit keeps on sliding down. There's just I guess, like I said a couple of weeks ago, wondering when the what do they call it, the par, like par zero, 1.00. Traders start to come out again and start talking about the possibility of the euro unit going down to par. I kind of doubt it'll happen. It seems like just as much as the dollar is so firm, there's no reason why the euro unit would go down that much. Just solely because of, it's a big economy. There's a opportunity as much. They're the second largest. They're really the second largest central bank in the world, and so they really plow in a lot of equity, just like the Americans do in the Federal Reserve, and then all the other, like the Exchequer out of London does it, and so forth. So the the chances of it going to zero, down to 1.00 is very slim as far as I can tell. All right, and then let's look at the cable. Right there, it's went into a sell there yesterday. You can see it's lifting up, but it hasn't perked its little head up yet. Let's put the line in there. Right there. And oh, it's starting to lag. I can hear that. How about that? The lag is starting to kick out more. All right, and so the cable firming up today, but you can see we're in a weekly buy since this area right here, so it's kind of drifting down. I'm sorry, weekly sell. Pink is sell. Green is buy. And so, you can see from this area here, we've been in a weekly sell and it's drifting down, and we got into a daily sell, and it was the winner chicken dinner thing, and that's pretty much where we're at. Now let's jump over to Turkish lira. They went and took out the high again right there. We expect that. Now we expect them to digest a little bit more and then go out and go take out the dotted line. We figure that'll be the next adventure, and that'll be all-time lows, I guess you call it, or all-time highs, however you want to describe it. And you can see here we are flirting with the weekly buy. We're above all week long the weekly buy number, and we've been in a daily buy. So it just shows us the amount of strength that is kicking out with the Turkish lira against the dollar, because they pounced on it here from the political decision they made with their central bank. So it's going to make that money back. It has no choice. Our math always does that. It always picks it up and finds a way to spin it right back into profitable side. So it's just one of those laboratory type of adventures on watching the Turkish lira on that situation now. Just watching to see it climb and make the difference between the 720 and the 805. It's 85. From this point on, an 85 would put it up into this number right there, 85-ish. Right there. That's where we got that 85 number. So that's what we're waiting for, is to see the next leg that takes us up to those dotted lines. And we're deriving that from the loss of this right here, that gap. Because our math was in a sell, made a few dollars, and then it exploded on the upside from the politics. Just the way it goes, traders. The world goes around that way. All right, now let's drift over to the Canadian. That's usually where we head to start thinking about moving out of, or going towards the energy sector. So you can see here, Canadian is showing some strength today by being down. So that means that oil has a chance of being a little bit firmer. Let's go over and check out the other side of that, and that is the Kiwi against the Canadian dollar, which we refer to as the loonie trade. And that's what they call it on the trading desk. And you can see here it's pretty much unched, but it is in a daily buy from here. So there's some strength in there. So now we'll go take a peek at crude oil. There's copper. And we expect to see crude oil sideways to up. And that's pretty much where it's at there. So it's just pretty much unched from yesterday. And we've gone up and we've come down, and there it is. And you can see we're in a buy. At one point last night, right before we sent out the charts, that was in it tried to push it into the sell, but about after we sent the charts out, about 15-20 minutes later, data came in and pushed it right back up again, and that's where we are today. The oil market is trying to be firm in here. And then what we do is we take a look at nat gas right there. Same situation, firm for this time of the year. That's unique. Wonder what that says about next fall and winter's energy prices. It says something's going to be a lot more tenacious. At least that's the way I'm interpreting that right now. Just because of the fact that they don't want to sell this stuff down. It says to me, watch out. Have your option spreads on, producers. Protect yourself. Don't let yourselves get trapped into missing inventory. Okay. And then last but not least, we take a look at the robo-gas, which is the product that goes into the automobiles right there. You see that is trying to lift back up again. It looks like it almost made it into a buy yesterday, but we didn't get the green dot. We got the red and green dot. And today we're trapped in the same situation. Red and green dots again today. See that right there. And so it's trying to get its legs going. Let's do this. Let's refresh it. And you see, oh, okay. Refreshing it pushed it into the buy. Good. We haven't looked at it since yesterday. So yesterday it closed into the buy, and it's still lifting up today. And that's a refresh chart that's live. So, the energy prices are telling us that there's definitely going to be some strength hiding out there, or coming into them over the next couple months. Because, well, first of all, we know that the summer season, since the coronavirus situation is becoming, less influential to our society, we're going to see a lot more transportation use, and people are going to, then they're flooding them with cash. There's talk of another stimulus check again here in the States. So they are trying to make it party like it's 1999. Doc here having a couple peanuts for breakfast. I'm a little hungry. All right, now let's drift over to the currencies again. We'll go to the currencies. There we are. And then start off with the ruble. You can see the ruble went into that sell there a couple days ago. Let's just give it a refresh. Just to double check, but I believe it's updated very well. There it is. And you can see here we're trying to play with the weekly sell. Almost there. I'm going to widen that so you can see. We're just a little far away from getting in there, not much, but we're in a daily sell here. Maybe the ruble will perk its little head up and get going. We're just like the cable, where I'm always thinking that we're going to see the 140s in the cable against the dollar. I'm the same way with the ruble. I keep on thinking we're going to see the 40s in the ruble. Always. Anytime it gets into a weekly sell, I figure 40s. That's it. It's where my head's at. I have the fundamentals in my head, thinking that, that educated a workforce, that many natural resources, how can the product be that high up? At least that's where my head's at. So I'm like a ruble fan. Just like I'm a cable fan, and for the dollar, I'm not a dollar fan. I just wish the thing would slow down and not be so expensive. All right, let's jump over to the yen. Right there, you can see that marching away. Been in the buy since here on the daily. Been in the weekly since back here. So, the math is doing its job, what it's supposed to do. Keep us on the right trend. The MOMO, as we used to call it on the floor, momentum. We used to, instead of calling it momentum, I was having a conversation with Robin today at 3:33 Eastern Standard Time, because it's not today, tomorrow. There's the holiday, and because it's the Friday, is the markets are closed, and it's a Good Friday, and it's Easter Sunday, and because of that, the traders will be making a sound at 3:33. They do that on holidays. They've done that for a long time. They're making sounds. And, remember, you're on a trading floor. You're used to screaming and yelling and making all kinds of goofy noises. So, and the sound is whoop, whoop, whoop. And so if you ever get a chance to tune into a trading floor live at 3:33 Eastern Standard Time, like the New York trading floor in particular, that's one of their traditions to make that noise. And you can hear it at 3:32 and 3:31. You hear Rob and I were talking about this, about tricks we used to do on the trading floors, like putting baby powder on people's shoes, and you could watch their footprints all over the trading floor, or stapling together trading cards, where you write your trades on, and tickets, stapling them together and making a giant tail and putting it on the back of somebody. Things like that, or we put signs on people's backs. Anyhow, there's the yen marching up. There's the Momo. All right, let's take a look at where do we go from here? Oh yes, we take a peek at Zolty. There's Zolty. It's marching up, but it's starting to roll over again, going through the time manifold here. You see that? Let's widen that. Right there. Yep, and let's widen it out a little bit, like so. So you can see here they've broken through the time. Let's make that time manifold a little bit brighter. Let's make it yellowish like that. That's cool. And make it thickerish. Because we like to look at the time manifold. It kind of gives us insight to what's going on there. There we go. And so this here, the white lines pierced it. You can see there's pressure on it. And but at the same time, we're in a weekly buy since back down in here. So we'll see if it goes through the zero line, like right here. They start taking little profits out of it, and then they, or vice versa, I guess it is, and then it starts to run the other way again. And so that's the Zalti. We like to look at that. That's the second largest industrial nation now on the continent, or at least battling for it constantly. That's pretty impressive. And then from there we go over to the other currency. What is that? That's the Mexican peso right there. Let's do the same thing with that too. Let's change those colors. The peso's been acting very well. Their president has been doing some really solid stuff for the country. And so we're seeing the right action in it, I guess you could say. And you can see in this case here, we went into the sell right here. It's been a little weak. We're in a weekly sell. It's a lot more weak, and it's winner, winner, chicken dinner. But it's not really going too far. When you really scrunch this up, you notice that the range is relatively tight for the last 3 or 4 months. Basically between the mid 21s down to the mid 19s. That's not too bad. That's pretty good, especially with the craziness that's going on up their northern neighbor here in the United States. It's pretty impressive, actually. Remember, when this goes down, it's becoming more valuable. So this is a good thing. And when it's going up, it's becoming less valuable. Alrighty. Let's head over to, what other currencies do we look at this point? I guess we wait to see if anybody cares to see anything. That's what it really comes down to. So right now, we don't really drift into any other currencies unless you ask for it. Now let's go over and take a look. From there, we go to the metals market, see what the metals market is doing. And I start off with, there is gold. You can see it right there. We can throw it up on J4X at the same time. See how the gold is doing? Right there. And you can see it's trading at, was that 16? Okay, so there's a premium to it right now. So what are we looking at here? We're looking at April gold, right? So it expires in a couple weeks. So I guess the New York market is underneath the London market, because you can see the spot at Dukascopy is 1687 and New York is 1683. Just for interest's sake, I guess we should go look for the next futures contract, which I would imagine, let's see, must be August gold? Probably August gold. So they're probably buying spot. Let me go on the other machine here and see what's going on. Let's see if there's an insight on which is the front month. April could be coming to its end. Let's see, go to charts. Let's take gold and put it there. I'm on another machine at the moment. Let me see if we can figure out. Usually it'll tell me who the front month is. And the front month is, let's see, let's move that over.
Market data connection lost.
Oh no, robot, easy robot.
Market data connection.
Okay, so they're doing June gold right now. That's what it is. So let's move over to June gold. We're going to do that today. We're going to move to June gold. Remove, and then let's change. And I would imagine the moment the premium disappeared out of the trade, the London trade, I'd imagine that was probably the answer right there. So add symbol, futures, and let's do that. GC, look up, and let's put June in there. There's the June. Now close. Let's slide that in. Whoa, keyboard. And let's go like that, that. There we are. And there is June. And let's get the June in there too. We need to see again. There it is. See. And the June. Close. There we are. And so on June gold, let's put that in. We'll type that in so people know what it is. June. Shift gold. There we are. And you can see they're pretty much matched up, except for obviously there. That gets moved over to there. And that sell gets moved over one from there, right? Right there, yeah. And then that buy gets, that buy stays. And that sell, now that's curious, isn't it? Because with this, there is no buy. That buy doesn't exist. Remove. And that sell doesn't exist. Remove. Because it went into a sell up in here and never was able to get out of it. That's interesting. It couldn't get into a buy there because it was a red dot, and then it wasn't able to get into the truly the buy right here. And it's been in a weekly sell out of all that, so the only thing you can trade is the shorts, not the longs. So let's save that. File, save workspace as, there we are. And now what we'll do is, that's June gold. And that's trading at 1688. You can see Dukascopy is 1688. So that makes more sense because the spot and the New York market, so spot London market versus New York market, usually there should be something in there. Ajou, how you doing? Window is in the background. Oh, I'm sorry. Sorry about that. Let's fix that. There it is. So there's the June one. So thank you for pointing that out. I appreciate that. I'm so staring at so many screens and doing different things. Sometimes I forget to look on there. As I take another bite of some peanuts. All right, that's the end of my peanut adventure. I'm sorry to do that and speak at the same time. I promise. No more peanuts until after the webinar. All right, now let's take a look at, I don't know what the platinum is. See if we can figure out which contract the platinum is the front month. I want to see what the spread looks like. We've been a big bear of that spread, and it's worked out really well. Let's see, keyboard right there. And I want to see what the platinum is. PL. Let's see, platinum. There it is. There's platinum, and the front month is July. Okay. So let's go over to the platinum contract. No one seems to be following platinum at the moment, but I like to watch the spread and trade that spread. And that was April too. So let's go to July. So we're going to, let's see, let's make a copy of that. Copy. Okay. Now let's put platinum in there for July. Format. Add symbol. And PL. And remember, as you or anybody else out there, if you have an interest in any particular product, just shout it out and we'll go look at it. Look up. And that is what I say, July. See, July is N, right? Nancy? There it is. July. Close. And then, okay. Now let's replace it. Do the old platinum. July. There we are. Okay, and then let's put it in there. Paste. And go like that. July. There we are. No one's looking at it, but it's always fun to have up on there. All right, now on platinum, okay, there was the last buy. We can steal that one right there and just stick it there. And then the last sell was right here. Yeah, right there, just a couple days ago. So we'll grab that sell right there and move that to there. And we've been in a weekly sell since right there. Okay, not too bad. And you would have thought that we'd have gotten into a sell here, but didn't. Look at that. What a ridiculously tenacious situation. So 1183, and we look at that right there. Let's take the mouse here. 1183, and then we go and look at gold, which is a 1687, basically 88 right there. See that? For gold, and we subtract the 2. So 1688 minus 1183 comes out to be 505. All right, so 505. So the spread is at 505, and we've been a bear since 1000, so that works out really well. Let's see. As you says, I'd like to ask you about BAND. BAND. What's B? Let's see. Monthly high and lower band. Does the bands need to be horizontal or can it be trending? Let's see. Band. BAD. What is BAND? Is that a stock or a ETF or the bands? What do you mean? Oh, you mean these things right here? You want me to describe our tools? Would you want me to describe the tools we have here? So in other words, like the time manifolds, these things right here, and the time manifolds here. They're a nonlinear time manifold. Let me see if I can give you a description on it. Is that what you're interested in? We can do that very easily for you. Gold. On gold, sure, we can go take a look at gold. So let me just say save and save as, and we're good. Okay, now let's go over to gold again, right there. No. Well, what is BAND? The bands? Do you mean these bands here? Let me just light it up like that. These things right here as bands? Is that what you're talking about? When we go to the monthly chart, a monthly chart of gold. Oh, that's interesting. Want me to do it on J4X, or do you want me to do it on my Chicago Quant? And we'll see what Azure says about that. I'm always interested in trying to explore new ideas. Upper band and lower band. Right here? These things right here? Let me make a copy. Copy. And then right here, and what we can do is widen this out too. Like that. And then let's put that in there. You're labeling these as bands right there, right? Which is a good name for them. What they are is, let me show you what I call them. This is my invention. Hey, like in Rocky Balboa, huh? Hey, yo, like I invented that, huh? All right, let me show you what that is. Okay. Here's a description of my work. And let's see. Okay. Gonna make a copy of this whole thing. There we are. Copy. And then I guess what we could do is we could just pull it up there, really. So right there. See that? This is a description of what we're talking about here. So green line. Okay. Yeah, and then yellow band, like that, and what do you call it here? Let's see, green line and histogram go plus a bisignal. Let's see, where's the time manifolds? There it is, right there. I call them overbought. That's what I do, right there. Let me see if I can copy that and put that up on the screen. Copy, and then move this down, and then you can look at the video on that. And then go like that and paste. There we are. That's what I call them. But bands are just as good too. Okay. See that right there? So I call them my overbought, oversold, nonlinear time manifold. But bands is okay. I like that too. Bands can be, you can call them bands. I think that's pretty cool. Now, market structure, what it's doing is here, see how in this case here, you see the green line, right? That's a moving average of my mathematics. The histogram is also a moving average of my mathematics, okay? And so my theorem, my formula. And so then what happens is that the bands are designed to be a one standard deviation of my math on the plus side and vice versa. That's why they're a mirror image of each other, okay? So now notice that when the histogram and the green line are above the band, okay, right there. When they're above the band, you can see that there's strength in the product. See, not a good one, but it's workable. Let's go like that. And then when it pierces it, especially when you're in a weekly cell. See how we're in a weekly cell here? The weekly quant signal. It's below the zero line, and the green line is below the zero line. That's a sell signal. Okay, that's a downward momentum. All right, now when you see it go in, markets go up and down on it. This is a daily basis. This is a weekly basis. Down here below. And so what happens when you see this thing breaking the top band, weakness is coming. Okay, see it there? And then you can see when it gets sold all the way down and starts to derive and push through the band again here on the upside, notice the strength comes back in again. Okay? But that's what I call it. This is my invention here. My, like that. There we are. Overbought, oversold, nonlinear time manifold. It's a new way of looking at time. That's what it is. It's something I invented back in 1977. It's been working ever since. And I back tested it, and it works way, many decades and centuries previously too. And so that's what that is. It's a different way of looking at time without going all Lenny Susskind on it. And so that's what I do. Or Sean Carroll, whoever you want to pay attention to. So anyway, there it is. And so that's what it is. It's a standard deviation of my formula, and it just happens to create a time manifestation. It's very fascinating. And so I guess you have to say is, how can this thing be a reference of a different way of measuring time? And that we could get deeper into if you had interest in that. But in the end result is you're just trying to trade and make money. And so it helps you understand the momentum. See where it does it here? It breaks the time manifold. See, it's adjusting for itself too. So it's fluctuating like a packet of a unit packet in topological space. And so I'm going to go all Perlman on you. And so in the end result is that you can see the value of it drops. It's always telling us. Think of this as a Maxwellian surface. All right, James Clerk Maxwell, electromagnetic field, and we're measuring objects that move on the electromagnetic field. Okay, and that's what we're looking at. It's an invention of mine to fight the Higgs boson concept, because I thought that the Higgs boson was just a mathematical anomaly that was justified through a starting point of differential equations. So I chose to, instead of dealing with accelerator concepts, I did relativistic concepts and tried to understand how particles move without interfering with them. I had that double slit problem in my head. So it was something I invented back in '77. And it just happened as a legalized option trading, some of us math wonks ran to the financial markets and left physics and mathematics because it was more profitable to be doing this than that. And so that's where we are. But if you notice, looking at it, let's make it fat too. I like that. Let's make that fatterish so it kind of exemplifies itself just a teeny weeny little more. Like that. There we go. So there's the time manifold. Matter of fact, we should take your band word and make that thickerish too. There we are. So there it is. And so it fluctuates at different intervals because time is not fixed. It gravitates to its mass. All right. Anyway, forget about all that other stuff. All they're trying to do is guess if it's going to go up in value or down. And so you can see when we go into the minus side, let's do this. Let's move this up on a week-to-week basis, on a longer-term basis, which has more gravitas. What we see is the product has a natural tendency to go down in value. Let's move this over just a little bit more. Notice we go into a weekly sell here. Let's do this. We'll go like this. That's the week that it's confirmed that it goes into a sell. See? Like that. All right? So it's confirmed this week that it's going in a sell. And then what happens is look at it. What does it do? Is it lower here or is it higher here? Obviously, it's lower. And so it's our time manifold, or a nonlinear time manifold, helps us to understand the pressures of the movement of the object on the on this field. Wow, is that cool or what? It always blows my mind every day. It keeps me going for the last 40 some odd years. So that is what you're looking at. So it's okay. You can call it a band because it is a band. It's just that I have a cuter name for it. But we can always call it the bands too at the same time because it is a band. So that's where we are. And then when you go over to my LinkedIn page, it has a better description of all this mess. You know, I guess we could cut and paste the whole thing and put it up on there. And then you've got Mr. Euler, who is the greatest mathematician of all time. And you really have some interesting nibbits. Does that help you, Azure? It's kind of fun, huh? You know, the bands help. They really give you a good idea what's going on. And this way, it's not conjecture. It's predictive, spooky numbers at a distance, basically. That's what it really comes down to. Love all those cute little things I say. All right. For any of you math wonks out there, we're not going all Lenny Susskind. We really are not. We are, you know, there is no 11 dimensions here. Found a TV show that's playing around with that right now, which is very entertaining. What else can we say here about any of this stuff? So does that help you out at all, Azure? Can we maximize the window? Sure. You mean you want to see it even bigger? We can do that. Let's see. All right, let's see how we do that. So I guess if we go like that. Oop. I wonder if we can pull it like that. No, let's see, right there. How's that? Is that better? And so you can observe it and see the characteristics. You notice, like right here, it's now that you have it lit up. Matter of fact, would you believe we're seeing more on our screen than how about that? We're seeing a lot more data. Okay, so you see here. Let's make this thickerish. See how the weekly signal goes into the buy from this particular week. Here, we'll do this. We'll light it up again like this. There we go. The close of that week, it goes into a buy in there, and it goes up in value. See, it's your classic James Clerk Maxwell thing, you know. And then you can see sometimes, in other words, we have no power over it. You know, we don't tell the market what to do. The market tells us. So you can see here, it goes into a sell from this sell-off in here. I think, is that it? Let's see, let's move that over. Yeah, so it goes into the sell-off there. Only lasts for a few days. That's it. You know, it got trapped. Now notice that here, the daily went into a sell-off literally weeks ahead of time. You know, the pressure was on it from here. You can see, you know, it was telling us that the pressure was coming on a day-to-day basis. And sure enough, it broke down, and then it took like what 2 weeks here. Can you see that? Yeah, you can see that, right? Yeah, you see that. So you can see, it has this very interesting predictive value. Matter of fact, how the hell did it even go into a buy there? That goes into a weekly buy. You never even can take it because we're in sells, on a daily basis. So if these two are not coordinated together, you don't want to be, fighting with them. So that's the. I guess we're going to label this webinar "How to Read Doc's Math." How about that? I think that's a goodie. And so, that's MGA. That's not Azure. Oh, good. I'm glad, MGA. Hey, how you doing? So, our math is the descriptive. It's relatively simplistic. In other words, when it goes plus, you get long. When it goes minus, you get short. That's it. And when they're working together, that's when you do it. You don't do it outside that range. You do it inside that range. So that's where we are. If you want to read more about it, you can go to, where can you go? You come here every day. That's to start off with. Just come to Dukascopy. I'm always here every day. Dukascopy gives me a platform to pontificate about the marketplace. And then, let's see. And then if you're hungry to learn a little bit more, well, obviously you just ask questions. But if you have an interest, oh, that's not right. If you have an interest, just go there. That's where we put the charts. So, ooh, that's good. And so that's where we're at. There we are. So you come to Dukascopy and the webinars we do each day. And at the same time, if you want to go deeper into it, you go to this website here. You'll find it. There it is. Okay. And that's pretty much the name of the whole game, really. The charts and, how to understand, how to read. That's pretty much the whole name of the game, really. All right. Guys, want to see anything else? We can go look at another product if you want to see another product, or we can keep on exploring this. It's okay. It's all fine with me. All fine with me. Right there. Just another little view. There we go. All right. So now, I'll wait and see if you want to see another product. If not another product, then we've kind of dissected this. Let's see. Oh, we didn't even look at silver. Let's take a look at silver. We looked at gold and platinum. We didn't even look at silver. So we can take a good look at silver. Let's see. Where do we go to get that done? Okay, window right there. And then there's silver. Now, which silver are we looking at? We're looking at May silver. So that's still in vogue, I guess. That's fine. And you can see here, the same situation. Goes into a sell, then jumps back. Can't go into a buy because we have a red and green dot. And then I guess it goes into the buy there. Let's give that a refresh. Reload. 2 weeks. Yeah, so it puts it into the buy there and then pukes. But the problem is you can't get long. Let's grab that buy. You can't get long here. And the reason why you can't get long here, even with it being a very short-term buy at the moment, or at that moment in time. Let's also take, let's put the sell back in there, like so. There's the sell. And the reason why you can't is because why, traders? We've been in a weekly sell out of this whole period of time. See that right there? We've been in a weekly sell since up in here. Okay? And because of that, we've been in a weekly sell out of it all. The longs have, you're not supposed to take any of the longs, only take the shorts. So like here you could sell it short. You see that for a couple of days it makes money. And then you can see here goes into a short on the close of this one, the spike up top here, another winner chicken dinner. Then you have one here which pretty much fights with you. Is it there or is it over one? I guess it's over one. So it goes into the sell here, goes down for a day or so, and that's about it, and it starts to lift back up again. Then you have a sell here, and it's a winner, and literally the next day it goes back into a buy and tells you to cover your win, which is lower than where you sold it short, so that's okay. And then you have a short here. Or is it there, the short? Let's see, what does that say? That's the short. The short is a day back further. So the short is right there. I stick these lines in to help people read it. And then, so that's the short right there, and you get an instant gratification, another winner, winner, chicken dinner. But you can't take longs because it's in a weekly sell. And as long as it stays in a weekly Momo down, you can't do that. Ah, sure. I was going to send that over to you this morning, too. I saved it. I don't remember if I did or not. I don't think I did. Check this out. It's showing strength in it. I sent it over to you for what, Friday? Didn't I send you an extra one Friday? Every so often I'll send you an extra one when it looks like it's doing something. Where is it at? Let's go find it. Where the hell are we? I'm lost. Oh, I know it is. Let's see. File, open workspace. There we go. I mean, you're getting 5, so I don't mind sending an extra one once in a while when something's happening. And you can always change what you're looking at to see something else too. So just ask Robin; he'll change it up for you. And then there it is. Matter of fact, that's where it's saved. Yeah, and it went into the buy there yesterday. The daily buy. We still got work on the weekly though. See that? So we had the volatility here 2 days back, and then yesterday it closed in the daily buy, and then you can see it's higher today. Let's give it a refresh again. And so once it's opened at New York time, that tail will come out. That's just emulating yesterday's number. And then you can see here, the weekly we're still in the weekly sell from here. So they're having issues, but right now, look at this. I thought that was interesting, This is where you were watching it before. This is very interesting here. I was thinking about that. It's in the weekly sell. You're hungry to get it to go long because you're long it. And, it goes into the... it tries to get into the weekly buy here. Not weekly, daily buy here. Come on, light up. So it tries to go there, but we got a red and green. And then the next day they sell it down. Okay? And so it's like a short there again. And then it goes back into the buy again. I guess we could literally put... I guess that's how it should... it's already... See, it's already in the sell. That's the thing. Is that because it couldn't go into the buy because of the red and green, it's been in a sell since here. It's been pounded so much, I mean, it was in a sell all the way to here with not going into the buy at all. Imagine if you come across our work before you were long, you would have been up in here in the 150s. Instead, you had to endure the weakness. That's why, it's well worth subscribing to our service because you can change the products around and get get 4 or 5 charts and keeps you in the hunt all the time, having the right momentum. So Andy, did you get a chance to see what we talked about in the gold? Were you watching when we did the gold here a few minutes ago with the lines and all like that? Let me just go back to the gold real quick. Did I close it? I didn't close it, did I? No, there it is. Where's that? Right there. Did you see? Where's it at? Let's go back to gold because we drew it out. Up on our website, we have descriptions of all this. But it's probably better in some ways when we talk about it more, about the characteristics and how it treats this stuff. So there's the New York Bell. So, this is the way to read it and to try to understand the nuances of it. I hope that all worked out for you. All right, traders. This is Doc from North America. We will catch you on the flip side tomorrow. Tomorrow's going to be the day before Good Friday. So, Doc from North America, arrivederci. Everybody have a safe and smart weekend. Oh, no, wait a minute. I'm drifting out here. Doc's crazy. We got 2 more days of work. Every day's a holiday. Party, party, party. There we go. All right. All right. Happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. Ta-ta for now, traders. If I can find the right mouse.